Bam. The late adopter. Hi guys, how you doing? Welcome back to the channel, to the new video. Bitcoin right now minus 2.92% in red. Yesterday, this is a weekly chart. Yesterday we had a big red candle over here. We closed below something called moving average, 20 moving average. That's the red line over here. And I know a lot of people are looking at something called exponential moving average, 21 actually, and we closed above that. So we're gonna talk about the difference between those two and which is correct or not. We're gonna see that. But right now we are getting some kind of support here down at 45,135, so we're gonna be watching that. That said, let's get in the charts and see what's actually happening over here. So let's start talking about this support down here on the weekly chart at 45,135. Will that hold? And if that gets broken, where are we going then? I'm looking at 38,158. Right now we are quite extended from the 10 moving average. That's the white line over here on the weekly chart. So I don't think we're gonna continue dropping too far away from it, because extensions usually is the thing that pulls the price back up to where it's supposed to be. Now, as I told you, this is the 20 moving average, and we fell below that, and that's quite a bearish sign. But people are still having some hopium, because we are having something called moving average exponential moving average, or EMA, and they are looking at number 21 moving average exponential. And if you look at that, then you can see clearly here that we actually managed to close above it. We managed to close above it, you can see here, and everybody's having super they are being still bullish and thinking that we are going to go up. Now we can still go up, and whether there is always a discussion whether the moving average or simple moving average or exponential moving average is the right average to look, or you should use 20 or 21, because this is 20 moving average. This 20 and this is the 21 moving average. So why is somebody using 20 moving average versus 21? Because 21 is a Fibonacci number. If you don't know what Fibonacci numbers are, basically there are numbers in nature that are appearing quite often based on math, and people are giving these numbers more significance than round numbers like 10, 20, 50. So instead of 20 and 50, they use 21 and 55, right? So this exponential moving average 21. So why difference between exponential and simple moving average? Simple moving average only takes the last 20 candles, finds the average of those 20 candles and puts the point there, while the exponential moving average does a little bit more math and changes how the prices of the previous candle, of the last candles, gets more weight than the old candles, so the price kind of reacts faster to the price. Now I don't like that. I don't like two things. Number one, I think the moving averages are just support and resistance line, and they should be looked at on the large time frames. And I think 50 is a round number, very human psychological number. So I like to also to use that. And all the big institutions are using like 50, 100, 200. So why would I use 55? And they are using moving averages, simple moving averages instead of exponential. The only people that are using exponential moving averages are traders. And I give more value to the hedge funds and institutionals and stuff like that. So that said, whether this is gonna hold or not, it kind of depends. I'm still saying I'm giving this move another week, because there is a very likely possibility that we just might actually get back above the 20 moving average, and that will be a rejection of the 20 moving, just like over here. Over here you can see here we fell down, and the next week we got back above the 10 moving average and we continued. Unfortunately, because of other technicals, we fell again through it, and we fell through the 20 moving average. But if you can climb back above it, then it would be a rejection of the 20 moving average technically. If you look at technicals, that's technical analysis, that's a rejection. You fall through, you get back. Two candles together, that's a rejection. That's why we are giving this another week to go to see if it can start climbing up again, if that's gonna happen. So now you know why people are looking at the exponential moving average, why I'm looking at simple moving average, what's gonna happen. Let's go to the daily charts and see what's happening on the daily charts right now. And you can see right now that we are extended on the daily charts from the certain moving averages, especially these up here, 10, 20, 50, 100 moving average. And once you get these extensions, you have to get some kind of pullback. That's why I'm saying that right now we are also almost hitting this 100 moving average down here. So the fact that we are sitting on the support of the 45,000, we are getting extended. I'm thinking some kind of pullback should come either way and hit these moving averages. When that's going to happen, it's kind of hard to tell, but you can see every time you get extended from the moving averages, This is just on the upside. You get a pull back into them, and the same thing goes when you are going to on the downside. You get extended to the downside, then you get a pull back into the moving averages. So that's what we're looking for right now, to get a pullback. So I'm not quite sure if this is gonna last that much longer to the downside. I don't see any technical bottoming patterns right now on the indicators, and nothing is actually showing that we are having some kind of reversal or something, but we can just because we are overextended, get out up. So on the 4-hourly chart, what I'm looking actually for, if this 10 and 20 moving average will reject us or not, because right now the 10 and 20 moving average is pushing the price down. You can see here, this is a rejection of the 10, this is a rejection of the 20, so we are getting pushed down. So we are still going to continue testing this 10 and 20 moving average, and at one point we'll manage to break it and test the 50 and 100 moving average, and that can actually all put us, or if that starts happening now, it can put us above 50,000 again. Whether that's gonna come right now, or we are gonna be pushed a little bit down again, it's kind of hard to tell right now, because entire market is very bearish. But I think when everybody's overly bearish, that the probability that we might actually push a little bit up is higher than that we might actually go a little bit down. So I'm looking actually to pull a little bit back up again, correct, at least correct a little bit of price, at least on the daily chart, because I think daily chart is quite extended from the moving averages. So we're gonna see that. Anyways, come back tomorrow to see more of Bitcoin. We do this Bitcoin video every single day, so subscribe to the channel. Come back tomorrow, we're gonna see what's happening. We got to follow Bitcoin day by day, every single day, to see what's happening, and you need to know that, because that's what else I'm gonna do. Thanks for watching, guys. See you around. Bye bye. Don't panic. Panic is not good for anything. See you around. Bye bye.